Hey everyone, hope everyone's doing well and had a good day in markets today. Let us quickly understand how Nifty behaved today. Quite an interesting day today. We had a triangle open here and then a strong bull rally here, a strong buy the close bull trend. However, the rally did not last for long. The market quickly entered a weak bear channel here with lower lows and lower highs. Towards the end of the day, the buy the close bull trend entered and we had a strong bull rally here. An attempt by the bulls to close the day near its high so as to make the bar on the daily time frame as bullish as they could. Interesting day today. We had a lot of trading range price action year and year, but a strong bull rally here as well as towards the end. Let us quickly understand what I was expecting going into the day today. Let us discuss the high time frame charts first. This is a weekly time frame chart. You can see clearly we have a consecutive buy climax here, buy climax here, buy climax here. We have a parabolic wedge top here, and this bar. This bar was the biggest bar late into the trend. And when that is the case, it is usually a buy climax, or you can say an exhaustion gap. Whenever there is a buy climax or an exhaustion gap, the first target for the bears is the close of the gap. What do I mean by close of the gap? I mean a sell-off below the prior swing high. So this was the first target for the bears, a sell-off below the prior swing high, which they already have achieved. The next target for the bears would be sell-off all the way to the bottom of this buy climax bar, which is 24,824. After a parabolic wedge drop, the market usually goes sideways to down for about 5 to 10 bars. So I'm expecting Nifty to remain sideways to down for about 5 to 10 weeks here. We already have been down for 2 weeks. For another 7 to 8 weeks, I'm expecting it to remain down. And while going sideways to down, I'm expecting a sell-off all the way to the bottom of this buy climax bar, which is 24,824, near the bottom of this floor. This is the next target for the bears. Usually around this area, usually around this zone, the bulls re-enter. They create some kind of a double bottom here, and the rally continues to go up. However, if the bulls fail and we do break out below this, the market might test the weekly EMA as well as the price swing low here. Also, one more thing to note here. Looking at how strong this rally is, the rally is in a very tight bull channel here. One bear bar reversal up, one two bear bars reversal up, one bear bar reversal up. The rally is in a very tight bull channel here. Do you expect the market to just straightforward reverse down after a parabolic wedge drop? That is a very low probability thing to happen. More likely the market is going to come down, will make pullback, make some kind of a second entry short here, and then maybe sell off all the way to the buy climax low here. So we have come down for about 3 weeks here. We might remain sideways to up for about 1 or 2 weeks and then maybe go down all the way to the buy climax low here. Now on the daily time frame chart, we have been in a very weak bull channel here. Breakouts above every prior highs have been failing. Here, right near the third push of this bull channel, we have sold off for about 10 bars here. Now this bar here, the Monday bar, this is a bull reversal bar. Yes, it has a bare body, but the close is above the midpoint of the bar. If you mark the high and low of the bar, the bulls have managed to close above the midpoint of the bar. And looking at all the trading range behavior in the past few bars, after 2 legs down, I was expecting buyers and I'm expecting sellers after about 2 legs up here. So I was expecting buyers above the previous day high and I'm expecting this gap here. We sold off, we have a 2 legs down, and usually in trading ranges, the gap is closed. Trading ranges usually disappoint the traders. The bears have had a good sell off here and have an open gap here. What will the trading range do to disappoint the bears? Is a close of this gap. This will disappoint the bears, and that is where I expect the rally to go to. So I was expecting buyers above the previous day high, and I was expecting the rally to go all the way to the prior swing low. The prior swing low was about 25,331. So I'm expecting rally in the next few days to go all the way to 25,331. If you look at the hourly chart, This was the chart in front of me at the beginning of the day. You can see we have a parabolic wedge bottom here. Also, if you mark a measure move based on the height of this entire trading range, we broke out below. We have a gap here. We sold off right near the measure move target. We have a parabolic wedge bottom right near the measure move target. So I was expecting buyers here. However, looking at how tight this sell-off has been, I was expecting if the market does open flat somewhere around this zone, I was expecting a sell-off on the open, the bulls to make some kind of a second entry buy here, and then maybe a reversal up all the way to the close of this gap. This, what happened today, was a bull surprise. I was expecting the market to pull back here, make some kind of a second entry bottom, and then reversal up. Because of how weak the buying pressure has been, it was not expected to reverse up this sharply, straightforward reversal up. This was a bull surprise. So let us understand the price action here. Let me mark the previous day high. This is the previous day high. We opened flat. And if you look at the first two bull bars here, strong bull bar closing near its high, as well as second bar, we have two consecutive bull bars. Bulls got the minimum follow through here. This is a buy the close bull trend. However, as I discussed on the 1 hour time frame, I was expecting buyers somewhere around this, sellers somewhere around this zone, a pullback here, maybe bulls to enter somewhere here, and then maybe make some kind of a high low double bottom, reverse up all the way to the close of this gap. So I was expecting this to be more likely a bull trap. We have two bars closing near its, we have two consecutive bull bars with at least one of them closing near its high, which is a minimum condition for a buy the close bull trend. However, we were right near the previous day high. So there was a possibility of this being a bull trap. And look what happened. We could not strongly break above the previous day high. Had we strongly broken out above this, I would have entered into my longs. But with all the bars to the left, and with a possibility of a parabolic wedge drop here, and a possibility of a bull trap on open and an opening reversal down, sell buyers somewhere around this zone, and then maybe a reversal up. I was looking to sell somewhere around this zone. So we found sellers near the previous high. Bulls failed to break out above. However, there was an absence of a good strong sell signal bar around this zone. I wanted to sell here. However, look at the sell signal bar, bar 4, big tail at the bottom of the bar. Usually, when the market is going to give a big move down or big move up, it creates a good buy signal bar or a good sell signal bar. The sell signal bar here was weak, which was an indication that if even if there is a sell-off, it will only be minor for a few bars, possibly a trading range open, and then maybe a reversal up. A bar looking like that is unlikely to remain as a high of the day. I'm looking to get short, but not a great sell signal bar here. Bar 5 was a good bar closing near its low. Reasonable to sell below this, but only for a scalp because you are expecting only a minor reversal down. You are expecting buy somewhere around this zone and a reversal up. So reasonable to sell below bar 4. Good follow through for the bears here. However, the bears failed to close below EMA. You look at bar 6, you look at bar 8, you look at bar 13. The bears were constantly failing to close below EMA. Also, this bar 7, was a high low double bottom with bar 1. Now, when you look at all the bars to the left, yes, this is a trading range. And in a trading range, you are looking to buy low and you are looking to sell high. We were around the sell zone here. So I am looking to sell. We have been rallying for about 22 bars here in our trading range. So I am expecting a bear leg in a trading range for about 10 to 15 bars here before I look to buy. However, the important thing to note here is the bulls have constantly been making higher lows in this entire trading range. Even this low, bar 7, did not fall below the low of bar 1. It missed it by a few ticks here. That is an indication of bull strength. Higher low here, 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 again a higher low here. This is all an indication of a bull strength. If the market is making minor higher lows in a trading range, it is a sign of an early bull trend, an early bull channel, and a possibility of a bull breakout and a measure move up. Yes, I was looking for a sell-off and buying somewhere here, but if the market is not doing what I was expecting it to do, I should change my mind. I should be objective. I should see what the bars are telling me. The bars have been constantly making higher lows all this time. And this was an indication that the market is soon going to break out above this trading range high, soon going to break out above the previous day high, and we might rally for some kind of a measure move up, maybe all the way to the close of this gap. So high low double bottom here. The bears have a low and short here, but they fail to break below the moving average. If you did sell below the low of bar 5, and with all this follow through, bad follow throughs, buyers coming in, bears failing to close below EMA, bears failing to break out strongly below the bar 1 low, you should exit your shorts, scalp out of your shorts, wait for a better sell setup or wait for a strong bear breakout before you look to sell. Reasonable to buy above bar 7, expecting a double bottom, a break above the neckline of the double bottom, and a measure move up. However, looking at how strong these bear bars were, I wanted this bar to be a very strong buy signal bar to buy above. This is not a very strong buy signal bar. It had a prominent tail on the top of the bar, which made me hesitant to buy above this bar. If you wanted to buy, you need a high probability, a bar with a which increases your probability to profit. Bar 10 was that bar. The bar closed near its high. It was a second entry buy. High probability to buy above bar 10, expecting a breakout above bar 5, above the high of the day, and a possible measure move up. With all these higher lows happening, the market was more likely going to break out above. So with bar 1, bar 7, and bar 13, the market made a triangle here. Let me mark it for you. We have a triangle and an IOI pattern here. Triangle usually is a breakout mode situation. 50% chance will break out above, 50% chance will break out below, and 50% chance the first breakout up or down is going to fail. So around this IOI pattern, there was only a 50% chance that we are going to break out above. However, considering all the bars to the left and with all these higher lows, the probability of a bull breakout was slightly above 50% here. So once you start getting this consecutive bull bars, two bull bars, three bull bars, this was a buy the close bull trend. All you have to do is hit buy the market and set for long. The market continued to rally for about 9 consecutive bull bars here, and we have a strong 12-bar bull micro channel. This was a strong bull rally. You can draw a parabolic wedge top here with bar 9, with bar 18, 21, and bar 24. This is a parabolic wedge buy climax. However, after such a strong reversal up, after 9 consecutive bull bars and 12-bar bull micro channel, every low has remained above the low of the prior bars here for about 12 bars. When this is the case, this is a strong major bull surprise. And when this something like that happens, this rally usually dominates the rest of the day. The market is unlikely to be a big bear trend day today. Today was more likely going to be a bull trend day or a trading range day. I was expecting the rally to continue and go all the way to the close of this gap. However, after this parabolic wedge top, I was expecting the market to remain sideways to down for about 5 to 10 bars, and I was looking to get long again for a rally all the way up. This was strong enough to get about 3 pushes up, maybe create some kind of another wedge top, and then maybe correct. However, market had different plans here. We reverse down, we have an II pattern here. Bar 26 is within the range of bar 25, and bar 20 7 is within the range of bar 26. Whenever you get an II pattern late in a trend, that is usually a final flag. The market rallies for a couple of bars up and then corrects down for about 5 to 10 bars. So once you go to II pattern, if you did buy above this, look at how the market was behaving. Bulwa, bear bulwa, bear bulwa. Yes, this bar did not go above the high of that bar, but this is a case of a truncated wedge on a smaller time frame chart. Bulba, beba. Third push did not go above the second push, but this still counts as a third push. And a wedge. Reasonable to sell below the low of bar 31 for a scalp. I was not expecting a big bear trend day today because of how strong this was. This was probably going to dominate the rest of the day. I was expecting the market to sell off for about few bars, test the EMA, and maybe continue to rally up with this II pattern here. And if you see, we have an IOI pattern here, bar 28, 29, and 30. You have an IA pattern here, an IOI pattern here. These are the signs of balanced market. Whenever you get things like this, the market is usually in a trading range. And what do you do in a trading range? You buy low and you sell high. You buy low after two legs down and you sell high for after two legs up. So if you do sell below bar 31, you are expecting about two legs down here. You sell for a scalp and you are not looking to buy for at least two legs. We sold off here, we pulled back, and we have a second leg down here. Bar 38. If you see, you can create a wedge. You can say this is a wedge bull flag with bar 29, bar 33, and 38. You can also say it is a wedge bull flag with this low, bar 26, bar 33, and bar 38. Also, this bar is an exact 50% pullback of this entire bull leg here. Let me mark it for you. See, exact 50% pullback, and the bulls have reversed it with a sharp tail at the bottom of this bar. There are always traders at a 50% pullback. The bulls buy here because there is a 60% chance that we are going to rally all the way near its high before we sell off all the way to the bottom of this. And we did. Towards the end of the day, we did not quite reach the high, but we did have a good rally here. There are also sellers selling near the 50% pullback because all they want is one more bear bar. They bet that if they get one more bear bar here, they will get a huge reward. Maybe a 1 is to 2, 1 is to 3, 1 is to 10 reward. So that is why you always find traders near the 50% pullback. On bar 38, we found more buyers than sellers, and we have a sharp reversal here. 20 EMA buy setup, wedge bull flag. Yes, we are in a trading range, and in a trading range, you buy low, sell high. So it was okay to buy above this bar high. Yes, the buy signal bar is not all that great, but this is a trading range. Even weak buy signal bars or weak sell signal bars work here. So you buy here for two legs up. We got about two legs up here. Would you sell below bar 42 or 43? If I'm watching the market this way, this is too few bars for a major trend reversal. You could sell here for a scalp, but not for a big bear trend here. About just 4 to 5 bars here. I expect about 10 bars pullback before we create a major trend reversal. And whenever there is a trading range, you usually get two legs up before the bears come in. So this was the second leg up here. And it was okay to sell below the low of bar 47. A possible lower high major trend reversal here. Reasonable to sell here for a swing, expecting a break below the neckline of this double top and a measure move down all the way to 25,124. Only 40% chance of that happening, 60% chance we were going to remain in this trading range after such a dominant feature of the day, this strong bull rally. Okay to sell here. We had a strong sell off here. We did break below this bar low, strong bear breakout as well as good follow through, but higher probability if you did not sell here, higher probability was to wait for a clear bear breakout below this prior swing low and then look to get short. This is a buy zone. Yes, we are getting lower highs and lower lows. So it is also a bear channel. But in a bear channel, there are always buyers near the price swing lows. So I was expecting buyers somewhere around this zone. If it did break out strongly below this swing low, along with follow through, I would have taken the short. I'm only looking to buy here. But after 6 to 7 bar bear micro channel here, a second leg down was likely. I did not participate in this pullback, and we did get a second leg down here. Okay to buy above this bar high. We do have a second leg down here. Okay to buy above this for 2 legs up because of all this trading range behavior. And if you did buy above bar 59, look at the follow through. We have a bull bar, yo, but the bulls have been failing to break above EMA, give a strong close above EMA, failing to break above this price swing high. And the bulls are scalping out above above their longs for about 10 points here. We rallied for about 11 points, and the bulls are scalping out. That is an indication that the bulls are not willing to hold their long for a swing. And we found sellers here. Again, we rallied down. You can see this is a clear wedge bottom with bar 53 and bar 59. We have a wedge bottom here. We pull back for 2 legs up. Now we have a consecutive wedge bottom here, a second wedge bottom here, wedge bottom here, wedge bottom here. That increases the chances that we might get some kind of reversal up. Also, let me get rid of the previous high. Let me mark this breakout point, today's swing high. Let me breakout point. This bar, the low of this bar is 25,156, and the high of this bar was 25,155.8. The bears were not able to close this gap. We have a consecutive wedge bottom. We have a breakout test with a gap. We have a good bull bar here. This is all a sign of bull strength. The bulls were able to keep the gap open, and they have a consecutive wedge bottom. The bears have failed to strongly break below any of the prior lows. The bears attempted to break below this, we got a pullback. The bears attempted to break below this, we got a pullback here. At every prior swing low, we have found buyers. And the buyers have also been able to keep this gap open. That was a sign of strength, which is the reason we got a strong buy the close bull trend towards the end of the day. So, what were the trades today? Okay to sell below bar 5. Okay to buy above bar 7 as well, but higher probability to buy above bar 10. And once you start getting this buy the close bull trend, you could buy here for any reason. Once you broke out above the triangle here, buy above bar 16, above 18, buy the close bull trend all the way till bar 23. Once you see a bear reversal bar looking like that, and after a parabolic wedge stop, and also a possible measure move target here. It did go above the measure move here. And you can see if we use the swing low from yesterday, we got an exact measure move based on that height. So when you see a bear reversal bar like that after a parabolic wedge stop, you exit your longs and wait to buy after a pullback. There was an iron pattern here, so okay to buy above bar 27 as well. But with all the bad follow throughs, you have to be aware that you are buying a final flag here. So if the market does go up, it will only be for a minor reversal up, maybe for a couple of bars, and it might reverse down. With the IA pattern here and IOI pattern here, these were the signs of balanced market. The market was soon going to enter a trading range. Look to buy low with 2 legs down. Look to sell high after 2 legs up. Okay to sell below bar 30. We have a truncated wedge here, a bear bar closing near its low. And with all the trading range behavior, I was expecting buy somewhere until EMA. We sold off for about 2 bars here. We have a wedge bottom here, 50% pullback on bar 38. And the bears have failed to strongly close below EMA. So I was expecting buyers okay to buy above bar 38. Okay to sell below bar 46. A buy above bar 59. Okay to buy above bar 70. And towards the end of the day, we close somewhere near its high. Okay, so what do I expect tomorrow? Interesting day today. If you did catch this rally, this was this rally as well as this rally. This was the highlight of the day. You would have made the most money if you did catch this. Otherwise, the entire day was nothing but scalps. So what do I expect tomorrow? If I look at the daily chart, as I explained before, I'm expecting this gap to close. The bears have not been able to create strong follow through bear bars after the break below this neckline. We have fallen for a measure move based on this height, and we have reversed up. And with all the trading range behavior and this weak bull channel, I'm expecting disappointment for the bears, like how the bulls have been disappointed after this deep pullback. I'm expecting the bears to be disappointed up for a deep pullback up. Yes, towards the next few weeks, I expect the market to come all the way to the bottom of this week by climax low, but only after a pullback here. So tomorrow, what do I think will happen tomorrow? This is a previous day high, and this is a previous day low. We did pull back here. We kept the gap open. If the market opens flat and continues to go up here, it is possible we might get a measure move all the way from the bottom of this swing low to this breakout point all the way to this. Also, that way is closer to the gap. So if we do open flat and if we continue to keep going up with strong bull bars, I will be looking to get long all the way for a rally at a minimum somewhere around 25,308 and somewhere to this gap 25,332. If we do open flat and instead reverse down, I'm not expecting a huge sell off. I'm expecting buys somewhere near the previous yellow. So if I do get short, it will only be for a minor reversal down, a scalp, and I will be looking to buy somewhere around this zone near the previous yellow and looking to get long all the way for a rally all the way to this gap. So I'm a little biased towards buying tomorrow. If we do open flat, if we do open gap down, somewhere near the previous day low, looking to buy. If we do open flat and break out above this, I'm looking to buy. What if we open a big gap down? Or what if we break below the previous day low with strong bear bars and strong follow throughs? Then I might get short and we might get a sell off all the way to the bottom of this weekly buy climax. This is an important target. In the next few weeks, the market is going to get here. But for tomorrow, I expect the market to close this gap first and then maybe reverse all the way down to the weekly buy climax. That's it. Thanks everyone for watching. See you all tomorrow and best of luck.